Yo, it's Midas. Let's talk about how I beat the S&P 500 by 103x in less than a year. I am not a course selling guru. I'm just someone who found a hack in the markets. So disclaimer, everything said in this video is only for educational purposes. Make sure to always do your own research. This is why you should listen to Midas while I beat the S&P 500 by 103x. If you want to prove this, check out my YouTube description on my link tree. It'll show you the date of my calls, the companies I called, where the call was posted, whether it was YouTube or TikTok, and my total P&L, which is over 4,000%. If you want to take a look at all my stock picks, it's also on my link in bio. But let's get to the video. So these are the hacks that I found into the market from investing for up to 5 years now. I do not invest in the S&P 500 or ETFs any longer. I believe that anyone who's younger than 40 should not invest in the S&P 500 or any ETFs. So I'll give you guys a story. When I first started investing, I was given the, advice that just put your money in the S&P 500. It will grow for you 5% every single year. But when you realize it, when you really think about it, let's say you put like $3,000 every single year, right? 5% of that is not a lot of money. And if you want to retire by your 30, you need to be more aggressive with your investment strategy. That's not going to make you financially free. And I'm assuming that you might not have the best job with the most high paying income, like over six figures. So obviously, investing in the S&P 500 is way too slow for you if you want to be rich when you're young. So I treat more of the S&P 500 as more of this wealth preservation tool and not a way to become financially free. Because making 10% year over year will not make you rich. This S&P is for the older generation who do not have time in their hands. But yeah, I think that, after going into penny stocks and understanding how the market works and what companies finding them early can do for you, I realized that the ETFs and S&P are just a scam that is just socially programmed for most investors to get into. And ETFs are, for me, just a basket of stocks for people who don't think. Sure, there are winners in this basket, but 90% of them are losers, which will drag down your eventual gains. And if you have time in your hands, why waste time with the wealth preserving tool or a basket of stocks that you aren't all interested in? Like, why bother being rich when you're 70 and can barely move instead of it in your 30s when you can fully enjoy your life? Since you are young, you have time in your hands. You can figure out strategies like for yourself and bet big without worrying about adult responsibilities like kids, family, etc. And instead of letting someone take control of your finances, learn how to pick your own stocks. That's how you control your own narrative in your life. My second tip is I do not do options trading. The only form of trading I do are swing/leap trades. I do both of these forms of trading for my penny stock plays. And I believe that day trading is very risky and is a gamble. I want you guys to do not listen to these get rich quick or you can achieve financial freedom off of trading or how I made 10K per month off of day trading. Gurus who say that trading is easy. You will lose lots of money before you even start making profit, and it's not as easy as you think. Many traders even say the risk to reward is just not worth it after starting, and these are pro traders because you're competing against algorithms, the markets, and quants. So I believe that if you want a risky way to make money, you should be investing in penny stocks because I believe that penny stocks are the perfect for you, especially if you're young, because you have time in your hands. Feel free to pause this video as to this guy that commented on my video, but he has a point, and I truly believe what he's saying. Penny stocks, you have time in your hands. If the stock ever crashes by like 50%, it has the potential to either rebound to its break-even point or go even higher. So therefore, you're not losing any money. However, with options trading, if you do lose money, that's because there's a timeline to it. If your stock or your option contract doesn't fulfill by a certain deadline, you either lose all your money or you sell for a loss. That means you're guaranteed to either lose money or, you have to gamble whether they do actually win. So unless you're very profitable and you have a good hand in options trading, I believe it's better to start with penny stocks or options trading. So this is basically highlighting what I just said, but compared to day trading where you have a set time frame between each trade that the bet is gone, with penny stocks, if you pick the right ones, then even though it crashes in the short term, you can continue holding the stock until you at least break even or for profit. And you have the benefit of time compared to day trading because you are young. And I only invest in disruptive technologies, usually penny stocks or a company that has a market cap of less than 100 billion. So if a company has a larger market cap, like over 100 billion, the reason why I don't really I kind of avoid these stocks is because the potential of you swinging big is very low unless you get in very early, like Palantir. My definition of penny stocks are any company that has a market cap of less than 10 billion. And I consider a disruptive technology as something that can change an industry or follow a certain narrative in the stock market. For example, with AI and defense with BigBear AI plus Bitcoin miner with Hive, quantum computing with QBTS, and more. And while there are other large cap companies where you can swing for like 20%, like Nike, Lululemon, United Health, etc., you will not get rich off of these. Sure, you can make a big, huge gain if you put in 100K plus into it, but most of you will not have that much money. Most of the companies are based off of fundamentals too, which is revenue, net loss, earnings, play, etc. That's not the point of this channel. The point of my channel is, we want to have those asymmetric bets that can give us 10x with as minimal capital as possible. So you're minimizing your risk. And we only have so much capital to disperse. So I choose to pick calculated bets on where I think the next big technology sector is being. That's how I'm able to get these 10x asymmetric bets. And I also follow Peter Thiel's investing strategy, which is a 10x asymmetric bet. If there is no potential of at least a 10x, I do not invest in that company long term. If I'm banking on a company increasing by 20 to 60%, I consider it as a short-term play. So if you're curious as to who Peter Thiel is, he's the first outside investor in Facebook who turned a 500K investment into over $1 billion. He also invested early in Palantir, which he was a co-founder of SpaceX, Airbnb, Stripe, LinkedIn, Asana, and Spotify. These companies are all asymmetric bets. But yeah, if you have any questions, comments down below and I'll respond when I can. If you want to listen to more of one-on-one mentorship into the stock or crypto markets, or you just want better calls a lot quicker than my YouTube or TikTok, check out my YouTube description on my link tree to join the Discord waitlist. And if you enjoyed the video, subscribe and like for more. I appreciate the support of all my followers. That's all I got for today. I'll catch you guys in the next video. Peace.